Welcome back to the program. Ayodeji Ebo, the Chief Executive Officer at Afrinvest Securities, is joining me right now from Lagos. Hello, Mr. Ebo. Good morning to you again, and welcome to the program.
Good morning, and thanks for having me.
Now, thank you for joining us. Let's get started. Speak to me about how the market has been for all of you. When I mean all of you, you and your colleagues in the last few months. I know there's no physical trading going on yet, isn't it, on the floor?
Yes. No physical trading, but remote trading has also. So the NSC have been able to help install the software on the laptop of stockbrokers, and that has also, so that hasn't affected activity at all.
So, of course, no physical trading, but trading is still going on, but remotely. Speak to me about how the last few months have been. In fact, let me say since March, since the first confirmed case of coronavirus in Nigeria, from that time till now, how has it been for the market? Just a 2-minute summary from that time till now.
Yeah, it's been a very interesting time for investors since March. We saw significant dip in the market and reach for this year a low in the month of March. And for investors that were bold enough to take that risk, we saw a significant rally in the market between that end of March and May, before the market began to moderate again. But it's been, when you compare dividend yield, looking at dividend yield perspective, that was the time when most of the companies also announced their full year results and also corporate action for dividend and bonuses. So for investors that have been able to bite the bullet, taking that post step, I've also enjoyed that opportunity. But when you look at investors that invested maybe earlier this year, for some of them, they may be out of the money. But what we've seen and observed regarding the equities market is having a long-term perspective. Another interesting dynamic that we've seen in this market is the increase in participation from retail and domestic investors. We're all aware that the foreign investors have been dictating the pace and the direction of our market. But with the increasing interest from local investors, that will create some form of stability. Based on NSC data as at April, the domestic investor accounted for about 58% of activity. That's very impressive and will create some form of stability in the market. So when you see foreign investors exiting the market, they don't have a stop limit when they are selling, and investors lose a lot. But once we're able to get a better mix and we're able to control this market, it will create some form of stability, and investors, most times, even when the macros look very dim, will not see a major dip in the market.
Okay, let me take you up on some of the things you've said. Quite interesting, because I know over the years we've been talking about local or retail, that's local domestic investors having an appreciable advantage in our capital market, because we've seen foreign portfolio investors coming in. Whatever happens, you know, they come in, they take the money, and they go, and the market drops. But now that you're saying, according to the NSC data, that 58% are retail investors, that's domestic investors. Like, what I mean by domestic investors are Nigerians, isn't it? So that my viewers can understand. Yes. So more Nigerians are investing in our local market. Where do you want it to go? If NSC says 58%, what would be the most advantageous for us? Like what kind of percentage from a market perspective?
Yeah, in my own view, I would love to see a market where we have at least maybe 70% domestic participation. And my reasons are, firstly, for the investors, in this period when we have lower yield environment for fixed income, it creates an alternative. We are aware that a lot of investors have not been able to overcome the trauma of the 2007-2008 crisis, that a lot of them lost money. Also, the banking tsunami that affected a lot of shareholders. but there are still a lot of opportunities for good names, and they've been able to weather the storm. Also, there would be some form of stability in the market. So it would be reaction when foreign investors are exiting, we won't see that major decline. So there will be enough investors to also buy up from the foreign investors at a good price when they're also trying to exit this market. That will also create confidence for the retail investors. And for the retail investors, the upcoming investors, we will begin to see day traders once activities begin to improve. Markets that have grown, like for instance, the Thailand market, most of their investors are retail based. And because of the day trading or the activities that we see in that market, it's created a lot of stability in the market. So while domestic investors cultivate the habit of creating savings culture so that they can invest, it would also help them improve and increase their wealth as they progress. Once you invest in stocks that are proving themselves over time, be very consistent in terms of dividend payments, then it would also create some form of cash flow for the investors.
Now, the question is, if you say that you are looking forward to a market having a retail domestic base of about 70%, isn't there a risk there? The risk in the terms that whatever happens in the domestic economy, Nigerians will be affected, and that would also impact the Nigerian market, the Nigerian stock market, and, you know, it perhaps goes in the negative for a very long time. You understand what I mean? Because if...
No, I get you, I understand you perfectly. But once we have a very diversified stock market, most sectors are not affected at the same. The negative impact on most of those sectors are not always proportionate. So, for instance, within this COVID period, there are some sectors that are enjoying that benefit. For when you talk about the telecom sector, we know most of us are working remotely, and for them, they are cashing out. More people are spending more on calls because you can't travel because of the lockdown. People are spending more on data. So when you look at that particular sector, they are also going to benefit currently on the back of the COVID-19 challenges. You also see the support CBN is providing for the pharmaceutical sector. It's also going to be a major boost. More people are also buying more supplement vitamins within this period. So most times, even if there are local global challenges, because for us, our revenue is tied to oil. So when we see a significant decline in oil, it affects our revenue and the impact on the economy. But it's good to also note that the contribution of governments to the global economy is less than 10%. So it's private sector that can drive this economy. Once we begin to see improvements and improvement in the market, most of the stocks would also be able to withstand that shock. Investors what we always advise is have a very diversified portfolio. Once you have that diversified portfolio across sectors, currently some of the sectors that are currently challenged, you have the banking space, because we're expecting non-performing loan in form of impairment charges to increase, because most of the customers are unable to pay their loans currently. Yes, it would have that impact, but when you look at how most of the banks have been able to weather the storm, beyond the decline in dividend payment that we would expect and maybe a decline on a year-on-year basis in their PAT, we believe in the long run, they would also weather that storm, get around this choppy terrain, and they would also be able to come out stronger. So by and large, I don't see if there's a domination of domestic investors in this market impacting even on Nigerians. We also need to be part of, we have that sense of responsibility. For instance, if I'm a shareholder of GT Bank, I will be more interested in how GT Bank grows. When there's the crisis, when you see in some other countries when people are vandalizing stuff, because you have a stake, you also want to protect that's your stake in that particular property. So, but by and large, I feel building a savings culture and an investment culture is also critical to the wealth of Nigerians. It is when you cultivate that habit of investment, you'll be able to also create wealth. Like economics or basic economics, that your income equals to consumption plus investment. Most people currently, we know, it's challenging. Income is equals to consumption. There's really no major savings that can lead to investment. But we also need to cultivate that culture. There are a lot of myths around you need a lot of money to invest. But you can start. There are a lot of platforms now that you don't need, that doesn't have a minimum entry level to trade stocks, and you can trade on your own. So we need to begin to do a lot of investor education, knowledge around that, such that as we're talking about how can we improve standard of living on the average Nigerian, even if your salary is 10,000 naira, you can set aside 100 naira on a monthly basis and begin to buy stocks for the long term. Once you invest for the long term, there's the chance of losing your money in the stock market is also very limited, especially when you put it in good names, do your due diligence, and over time, dividend payments, capital appreciation, at the end of the day, your return will be higher than some other form of investment. And that is also one way you can beat inflation in Nigeria.
Where should I take you up from? Because you've said a few things, but why I asked that question in terms of domestic investors is also because I understand where you're coming from. You gave me the analysis that there are some stocks that do well even during economic downturn. We call them non-cyclical stocks. Those are defensive stocks that they do well when an economy even experiences a downturn, like the essentials. People are buying food. So for companies that are into food production or food processing, they will do well. Like even the telecom companies, which you've talked about. But the question also is the Nigerian stock market is dominated by what majority of stocks? Is it cyclical stocks more or non-cyclical stocks more? And if you give me your answer, then we'll be able to go to, are the cyclical stocks more in market capitalization? Mr. Ebo, I hope you understand what I mean. Like the cyclical stocks.
I get you.
Yes, the cyclical stocks, for example, like the cement, the Dangotes and co. They are not having a good time right now. I don't know, I've not been able to authenticate that, but some of those companies are firing their workers. So those are cyclical stocks that are doing well when an economy is booming. But the Nigerian stock market is made up more of which kind of stocks that have higher capitalization. The first, which is the first most capitalized company, I think is Dangote Cement, followed by
Cement.
yes, MTN, then BOA. I think BOA is the third, then Airtel. Yes. So you see, good. So let me allow you.
Yes, I think you are right in terms of having more of cyclical stocks. Banking sector stocks account for over 50% of activities in our markets because of its liquidity, based on their number of shares and free floats. But most times, if you have that long-term perspective, we're expecting there's a projection that Nigeria will record negative growth rates in the next 2 quarters, or if not 3 quarters, depending on how we're able to do it regarding the implementation of our sustainability plan. But over time, they also withstand it. When you look at some of the top banking stocks, GT Bank currently traded as high as 33 naira this year and dipped to as low as 19. Now it's back to almost 20, 24, 25 naira. That's as we believe that even if they reduce the dividend they paid, final dividend was 2 naira 50 kobo. We expect dividend payments to reduce. Even if they reduce that to 2 naira, you will still see that when you can look at the dividend yield on the stock, will still be higher than what you get from fixed income. So there would also we believe that the economic cycle will affect a lot of the stocks that are quoted. But once you have that long-term perspective, like you expect Nigeria going into a recession, but we also expect that Nigeria would also come out within the next 2 or 3 quarters. Most of those companies too would also do well. government is now also sitting down, trying to just allow the economy slide into recession. When you check the sustainability plan, it looks very interesting, but if we are able to even implement 50% of it, it should help us. It should buffer a lot of the top line of most of these companies. It will de-risk a lot of the sectors, and we believe that most of those companies would also be able to deliver very interesting or positive return as we progress. So for investors, you need to diversify. You can have most of the non-cyclical stocks. Most times, in terms of liquidity, you don't have them there. So for most major investors, they may not be willing to invest in stocks that are not very liquid. They may be defensive, but when you talk about liquidity, liquidity is your ability to be able to buy and sell as when you want to, and you are not, you don't have to stay over a period of time to either sell or buy the stocks. So most investors, especially foreign investors and the institutional investors, they are always after liquidity of the stock. So most non-cyclical stocks, which we'll call defensive stocks, are not as liquid as the cyclical stocks.
Okay, let's take it from this angle also, which is the stimulus, trading on the stimulus that the government has, the stimulus that the government is coming up with, the monetary authorities, the fiscal authorities. You also did say that the the sustainability plan of the government looks interesting. That was what I discussed yesterday. The government is going with scenario 3, which is it intends to spend about 2.3 trillion naira for the Nigerian economy, about 1.1 trillion coming from the monetary authority. That I'm sure it will go to critical sectors. And most of these critical sectors, some of those companies are listed on the exchange. So how do you see that affecting, especially when some of those companies have not even assessed those funds? Like those in pharmaceuticals, you have like Fitsin Healthcare listed, you have Nimet Pharmaceuticals listed, you have like Okomu from the agro-allied sector and some other companies listed. How do you see the efficacy of this government stimulus impacting those companies, thereby also impacting the stock market? Also taking in mind, into cognizance, that it takes a long time, or it takes a while to be able to assess some of these funds, and not just in Nigeria. Because even when I was looking at other countries, for example, in the Euro region, over 2 trillion euros has been earmarked to support companies across Europe, but just about 15% has been gotten so far by those companies. In the UK, for example, I think they earmarked 300 billion pounds. About 50 billion pounds have gone to those companies. You understand what I mean? So it takes a while. So that
yes, you are correct. There's always a time lag. And for instance, the pharmaceutical company that the CBN has come up with the intervention fund, for most of them earlier this year, it was not part of their business strategy. So you need for them, they will need to rejig their strategy based on this cheaper source of funding. Most of them have been relying more on bank loan, and some of them, their parent company for funding. So for the CBN to support with 5% interest rates, maybe from 2021 to 9%, it will reduce their finance cost. And for some of them, they are looking at some form of expansion. It's also going to help them be able to plan and expand with cheaper source of funding. And so we believe that it's going to be positive, but like you rightly said, that time lag, it's going to take some time. If you are going to do your expansion based on setting up a factory now, it will take you some months, if not 1 or 2 years, before you are able to complete that factory and you can increase your capacity to produce more. So for investors that we are recommending that even that investing in that sector for, you need to have that long-term perspective. If you know that you can wait 2 to 3 years, we will see that result. Government has begun to look more inwards. Like we talked about the sustainability plan, most of it is to see how they want to use more of local materials. So we believe that with the support the pharmaceutical is getting, it would also help. For the banking sector, the CBN is also trying to see how the financial reporting in terms of the non-performing loan will not look so bad on the books of the banks. They've asked most of the banks to see how they want to restructure the loans, and they are going to engage the banks to see how they will give them some form of grace period regarding recognizing impairment charges on some of these loans. We saw that in some of the developed countries where they give them like 6 months grace period, so that for most of the loans where you are applying your probability in terms of default, you will not, based on current reality, will give you that grace period, and when you are reporting, your impairment charges will not be out of whack. So the intervention funds that the government has set aside is really positive, but sometimes we also get bothered when we don't see the impact assessment. So for the agri sector, we hear about 1 million farmers have been engaged. Can we see a detailed report to provide transparency on what the impact has been? The agri sector regarding production of rice, we used to be at this level. Now we have been able to grow it on a month-on-month basis based on this current level. This is what most of the products that currently CBN is looking about targeting about 10 other products. How have we been able to assess and look at the impact of the intervention fund, so that it's not just another form of leakage in our economy, where we set aside funds and we really can't track how it's translating into improved GDP. I think that is very critical, and that is also going to impact on how we see improvement in the earnings of the quoted company. If most of these funds are just set up and most of the companies are unable to access it. There was a news that I don't know if it's true, the power sector intervention fund, maybe about only 20%, if I can recall correctly, they've been able to access. So when we are looking at, there's entirely a different thing between setting up this fund and getting companies to access the funds. That's entirely different ball game. And if they are unable to access it, and we just hear the figure of the 1.1 trillion intervention fund being set up, and they are unable to access it, then we will not see any major impact on most of these positive impact on most of these companies that are supposed to access this fund to improve and translate into improved productivity.
Okay, with this thing now that we've just said, this analysis, for an investor watching or a would-be investor, someone that doesn't even understand the stock market, or someone that does not even have 1 naira in the stock market, and because of this pandemic, may see this pandemic as an opportunity to invest, what asset classes would you advise that investor right now? What asset classes do you want that investor to come into right now as an investor?
Okay, I think the first thing that for an investor you need to first identify is your investment objective. Once you're able to identify why are you trying to invest, what are you investing towards, then you'll be able to, I will still speak more on those asset classes. Also, you need to understand your investment, your risk appetite. It's critical. If you know that you are someone that you cannot sleep if you see a 5% decline on your portfolio, then you know that stock market is not meant for you, because you would always see it once in a while. Then you may look at more fixed income, or you also want to hedge and invest in dollar-denominated assets. Then it's also critical to understand your investment horizon, which means how long do you feel you need to invest? You have the funds available for investment. For the stock market that we've been discussing mostly this morning, investing in stock market is long-term perspective. So if you feel that I have my 1 million naira for my rent, I see this stock has gone down, I want to put the money, I need it in the next 6 months. Stock market is not meant for that. You need to be able to, you need to preserve that capital at that moment. So fixed income would be recommended. So coming down to, once you're able to identify those major 3 objectives, your investment objective, investment horizon, and your risk appetite, then you can be able to look at the classes of assets. Starting from equities, equities has its own inherent risk, but can give you a return that will be significantly higher than the fixed income market. You can also lose money, but that is why we would always recommend you diversify. Don't invest in just one stock or two stocks. Invest across sectors and in different companies that are proving themselves over time. Then coming to the fixed income market, treasury bills, interest rate is not very encouraging, but you can also take advantage of commercial paper. This low interest rate environment has given opportunity for a lot of corporates. We were all always concerned then when interest rate was significantly high, the crowding out of the private sector. Now, private sector corporates are able to access funds, especially those that have good names. We've seen a lot of commercial paper issuances, corporate bonds, and have been significantly oversubscribed. This is the time for a lot of those quoted companies to refinance and restructure their finance costs. Most of them have been depending more on short-term loans from the banks at higher rates, and this is the time for them to come and issue commercial paper. So we've seen there's a bit of premium over over treasury bills. So investors can begin to look more at commercial paper and invest more to enjoy that high interest rate. Also, it's good to look at bonds, investing for the long term. We saw the Sukuk bond, 11.2%, 7 years, and government made it affordable. Retail from 10,000 naira, you can invest. The bond will give you cash flow every 6 months. You can look at that. FGN savings bond, which government has stopped for a while, which we know, believe that they will soon resume. You get your cash flow on a quarterly basis. So if you need to preserve your capital, you can invest in such fund. Dollar-denominated asset is also very critical. We know Nigeria, there will always be year-on-year pressure on the naira, and there will always be adjustments. You cannot, if you know you have dollar obligations, you can also have that as part of your portfolio. And lastly, alternative assets. We've seen a lot going on within the agri space, a lot of crowdfunding with high interest rates. But investors also need to do their due diligence before they also invest in those alternative assets. And once you see very outrageous interest rates, then you should also be very careful because when you check the return on investment, even in the agri space, it's also within a reasonable level. So that's those classes of assets. And once you understand your investment objective, how long you are willing to leave the money, your risk appetite, then you can create a portfolio around these classes of assets, which over time, if one is not doing well, the other classes of assets will also be doing well. So on the balance of factors, the total return on your portfolio would be significantly positive, and perhaps you should be able to get closer to inflation rates.
Now, let's talk a bit about the companies listed on the exchange and perhaps what we'll be seeing in days, weeks, or months to come. Earlier, when I was doing my market analysis, I did tell our viewers, I don't know if you saw the news from Japan, that it's to raise about 27 billion naira capital. It's also to restructure. I think it will change its name. It will change its business. I don't know what business they're going into now. And it will restructure. Do you see, and it's going to raise that 27 billion naira through a rights issue. Do you foresee more rights issues? Do you also see public offers even in this pandemic? Is it possible? Do you see IPOs in this pandemic? Is it possible? Do you also see perhaps M&As amongst companies that may not? Is your company that will survive this pandemic? So is there a way that we'll begin to see like M&As among some companies, like in the insurance sector, for example? We know that the regulator has been deferring capitalization date, stabilization date. That is one industry that must capitalize, whether they defer it till forever. Let me borrow what the NMPC GMD told me on the show when I asked him, where's the subsidy? He said, Nancy, subsidy is gone forever. So I'm taking him on that. So you understand what I mean? That NICOM be shifting the goalpost. You understand what I mean? So yes. So would we begin to see some kind of M&A is coming from that industry, for example, rights issues, POs, IPOs?
Yeah, interesting. I think I'll start with the insurance sector, the M&As that we expect to see within that space. We know what needs to drive activity within that space is policy. We can see what's happened within the PFA sector, that's the pension sector. We need a policy that can also enforce the implementation of compulsory either life insurance and comprehensive insurance for the populace before we begin to see a major shift in that sector. Then, if you look critically at that sector, if the foreign investors are participating more for most of the high-end businesses within that space. So we believe that though the NICOM has been able to hold on to COVID-19 as the major reason for the shift, but it's becoming very tiring. A lot of transactions that have begun within that period when it was first announced have continued to stall as a result of that, because even for the potential investor trying to bring in capital to recapitalize the company, once they hear that news of a shift, they get very tired. And those transactions that should have closed have continued to remain open up till now, because there's really no date, and we are not sure if that will not be shifted again. But we believe that across other sectors, the banking space, we know the last acquisition or merger, we want to call it, that we saw was the acquisition of Diamond Bank. We feel that the tier 1 banks control over 80% of activity in terms of customer deposits, total assets, and total loan within that space. We may see more of acquisition within that space, because once you have a major market share controlled by some few people, the rest begin to struggle. And except they also try to adopt technology, which some of them are doing to drive. We see GTB that was ahead in terms of technology. Cost to income ratio for GTB is around 38%. The closest one after that you see Zenith Bank around 55% cost to income ratio. You will see that gap, and that is why you continue to see a premium in terms of price to book on GT Bank when people, based on their high ROE, that's return on equity, that's the return you get, and based on that return, you are also able to give something to potential investors. So we leaving the mergers and acquisition for rights issues. For most of the rights issue we've seen in this market, most of them have been structured. With the confidence have not been very strong, especially getting interest from most of the existing investors. So what you see is a major, you agree, a major shareholder or a major potential investor that have agreed to, once most of these investors denounce or they don't take up their rights, you see a major shareholder that you have agreed that will take it up. That is how most of these rights issues have been very successful that we've seen in recent times. Getting public offer will be a very tall order now. For most of the potential investors, they are not very happy with the current price. So, giving that opportunity for new shareholders to come and buy them at this very cheap level may not be too comfortable to them. What we may likely see is we saw, I think, Access Bank, some of them may just want to increase their holdings and buying at this very cheap level, pending when we see the rights, based on the framework, the economy in terms of the macros is looking positive, and also the appetite have improved. That is when I feel most of them may want to consider a public offer. What we may see, capital raise that we may see would be more of right issue, which will be open to existing shareholders. But for most of them, would have also identified some major strategic investors before you even announce that right issue. You highlighted for Japan, they are trying to go into gold, diversify their business into gold mining. But there was an issue, I think 1 or 2 years around their partnership with Milos and company then that a lot of investors thought they were going to bring in capital, and the stock rallied significantly before there were some form of allegations around that. So the company, I feel, we need to set the record straight, provide confidence so that investors who are trying to buy into the company now based on this new announcement does not get disappointed a second time. You know, it's always hard to build confidence, and it's very easy to bring it down. So as we begin to see interest from local investors or domestic investors, we need to be able to strengthen that confidence in the market. So by and large, in summary, capital raise based on equity now may not be something that we would see. We would see most of those companies trying to take advantage of the low interest rate environment to raise long-term capital. So more of corporate bonds. So you can have 5 to 7 years, raise a corporate bond at this current rate, 11, 13%, relative to the rate you get from the bank, if it's at 20%. And this is long-term. You would be able to use that for project to expand. And within the next 3 quarters, once the economy rebound, demand would also improve, and you'll be able to also repay over a period of time.
Now, how are you and your colleagues trading those virus fears, trading the fear in the market? How are you and your colleagues trading the rising infection rates? Over 20,000 right now in Nigeria. How are you trading rising infection rates?
Yeah, we've seen, if you check in the last 1 week, investors have been a bit cautious on the back of the second wave of coronavirus pandemic.
That's abroad, though. We are not talking second wave here yet. We are not out. We've not even seen the peak of the first.
Yeah, I get you. But we've seen that fear is there, and we know the challenge, even for Nigeria, the amount of new cases we're announcing is also just premised on the number of cases they're able to test. So we know that the number is even significantly higher than that. If they can ramp up testing today by 10 times, you would see that the number of cases also increase by that level before we begin to see a decline in the number of cases. But African countries have also come to realize that a total lockdown will not also solve the problem. Lassa fever, there are other diseases that we've lost even more lives to, that the economy was not shut down because of that. So we believe that it's to continue to enlighten people, because there are still a lot of Nigerians that still don't believe. They believe COVID-19 is a disease that kills the known and the rich. They still don't believe that this is very real. So we will just continue to, once we're able to improve more on enlightening and how to prevent the transmission, we believe that we may not see any major lockdown that we saw within that 5 weeks that would impact on business activity. So trading within this period, investors, what we have been pitching is that you can also be buying in tranches.
Have been having acting DG for a very long time. Thank goodness the president has done the needful with his commissioners. Do you see stability coming into the market regulator and also giving confidence to the market? 30 seconds.
Yeah, I think it's positive that we have, we now have someone substantial, because when you are also acting, there are some major decisions you may not be able to take. So now that you have someone that has been confirmed, then we believe that we should see more policy, more rules that will be introduced to improve confidence in this market. But government also needs to note there's been a lot of inconsistency in terms of the edge of the parastatal. So we hope that there will be some form of stability, that we have people that would at least be able to spend their full tenure before they leave that position. That would send more positive, especially for foreign investors. More positive signals to them.
Thank you very much, Mr. Ebo. I hope you had a fantastic time talking with me this morning. I think even as an investor, I got a lot of insight, and I hope our viewers did too. So thank you very much for joining us
Thanks
on the show.
Thanks for having me, and it's something we enjoy to do to enlighten the public.
Thank you. Thank you very much. Have a great day. All right, I've been speaking with Ayodeji Ebo, who is the Managing Director at Afrinvest Securities. We've been looking at the Nigerian capital market and how it is weathering this pandemic.